Section 23, the differences between banks and mortgage brokers. In the last section, we discussed how interest rates can affect a buyer's monthly payment and the overall cost of homeownership. Once buyers understand how financing impacts affordability, their next question is often, where should I get my loan? There isn't a single correct answer. Some buyers prefer working directly with a bank they've used for years. Others choose a mortgage broker who can compare loan options from multiple lenders. Both can help buyers obtain financing, but they operate differently. As a real estate professional, your job isn't to tell buyers where to get their loan. Instead, your role is to help them understand the differences so they can make an informed decision while working with qualified mortgage professionals. Understanding the difference. The easiest way to think about it is this. A bank generally offers loan products available through its own lending programs or affiliated channels. A mortgage broker works with multiple wholesale lenders and helps match borrowers with a loan program that best fits their financial situation. Both are licensed and regulated to originate residential mortgage loans, but they approach the lending process differently. Working with a bank. Many buyers begin with the bank where they already have checking or savings accounts. Some banks may offer relationship benefits, such as reduced lender fees or special pricing for existing customers. Banks often have established underwriting guidelines and may offer conventional loans, FHA loans, VA loans, USDA loans, portfolio loan products when available. Because every bank has its own lending guidelines, loan programs and qualification requirements can vary from one institution to another. Real-world example, David has banked with the same financial institution for more than 10 years. When he decides to purchase a home, he contacts his bank first because he's already familiar with their online banking system and customer service. His bank offers competitive financing, and because he already has several accounts with them, the process feels comfortable and familiar. For David, staying with his bank makes sense. Working with a mortgage broker, mortgage brokers take a different approach. Rather than offering only one lender's loan programs, they compare financing options from multiple wholesale lenders. This can give buyers access to a wider variety of loan products and underwriting options. Mortgage brokers are often helpful when buyers have unique financial situations, such as self-employment income, multiple income sources, recent career changes, non-traditional employment, credit challenges, unique property types. Because every lender has different guidelines, a broker may identify financing options that another lender does not offer. Real-world example. Maria owns a small landscaping business. Although her business is successful, her tax returns show significant business deductions that make qualifying more challenging. After reviewing several lending options, her mortgage broker identifies a lender whose guidelines better fit her financial situation. Instead of assuming financing isn't available, Maria finds a loan program that works for her specific circumstances. Neither option is always better. One of the biggest misconceptions buyers have is believing that one option is always superior. That simply isn't true. Sometimes a bank offers the best combination of rates, fees, and service. Other times, a mortgage broker finds a lender with more flexible underwriting or a loan program that better meets the buyer's needs. Every borrower is different. That's why comparing multiple loan options is often one of the smartest decisions a buyer can make. Arizona broker tip. When buyers ask, who should I use? Avoid recommending only one lender. Instead, provide several reputable lending professionals and encourage buyers to compare. Interest rates, closing costs, loan programs, communication, responsiveness, overall customer service. Often, the best lender isn't simply the one advertising the lowest rate. It's the one that communicates well and successfully gets the transaction to closing. Your role as the real estate professional. Your responsibility is to educate, not steer. Arizona real estate professionals should never guarantee that one lender is better than another or recommend a specific loan product. Instead, explain the differences between banks and mortgage brokers. Encourage buyers to compare several financing options. Refer buyers to qualified mortgage professionals. Allow buyers to make their own lending decisions. Questions regarding interest rates, loan approval, underwriting guidelines, or financing strategies should always be directed to the lender. Legal and ethical considerations. Arizona real estate professionals must remain transparent throughout the financing process. Under AAC R4281101, licensees are expected to deal fairly and honestly with all parties and avoid conflicts of interest. In addition, the Federal Real Estate Settlement Procedures Act, RESPA, prohibits accepting kickbacks, referral fees, or anything of value in exchange for referring settlement service providers, including mortgage lenders. If your brokerage has an affiliated mortgage company or business relationship, those relationships must be properly disclosed whenever required. The buyer should always remain free to choose the lender they believe best meets their needs, helping buyers make informed financing decisions. Whether a buyer chooses a bank or a mortgage broker, the goal is the same: obtaining financing that fits their financial situation and helps them successfully purchase a home. As a real estate professional, your value comes from educating buyers, helping them understand their options, maintaining open communication throughout the transaction, and referring financing questions to qualified mortgage professionals. When everyone works together, financing becomes another step toward a successful closing rather than an obstacle. Contract law connection. Although buyers are free to choose any qualified lender, financing delays can affect contractual deadlines contained in the Arizona Residential Resale Real Estate Purchase Contract. Encouraging buyers to begin the financing process early and maintain communication with their lender helps reduce the likelihood of missed deadlines, contract extensions, or closing delays. Online discussion question 1. Why might one buyer choose to work with a bank while another chooses a mortgage broker? Every buyer has different financial circumstances and priorities. Some prefer the convenience of working with their existing bank, while others benefit from a mortgage broker's ability to compare multiple lending options. Question 2. Why should buyers compare more than one lender? Answer. Comparing lenders allows buyers to evaluate interest rates, lender fees, communication, loan programs, and customer service so they can choose the financing that best fits their needs. Question 3. What is the real estate professional's role when discussing lenders? Answer. Agents should educate buyers about the financing process, explain general differences between lenders, provide referrals when requested, and encourage buyers to make their own lending decisions without steering them toward a particular lender.